Right, ladies and gentlemen, welcome to what is currently coined the DPA Lounge Talks. I am coping, and coping fairly well considering everything. We were supposed to have a panel today, recording with Wyatt, but he happens to not, life came in the way, cannot do it, and so we have decided to go ahead with what was planned anyways. With a slight alteration on the panel composition, but that's okay. Some of us I think you already recognize. And then we have some old panel veterans. We are particularly fortunate to be joined by Drew, who was meant to be in the panel that we were planning for today with Wyatt. So fortunately, Drew was willing to come here and basically help us get some clarity when it comes to issues of currency and commodity and those things that tend to be related to BRICS. And of course, we are likely to be discussing a little bit loosely. Now, due to all the alterations in time and so forth, this is not going to be a typical panel covering such an extensive topic over 2 hours. We are going to try to keep this at 1 hour, maybe even less. But we hope you will enjoy the conversation. And so, should I bring a round of introductions maybe to in case this goes for the main channel? Yeah, I think I'll do that. I'm coping. I'm from Norway. Was the sponsor of this panel, and now I have dragged it over to Shadowy to kind of help host this instead of Wyatt. So I'll pass it over to Shadowy to continue but just briefly introduce yourself to those who will be watching.
Yes, I'm from France and I know very little about currencies and the payment system. So I'm basically here to help and to learn about it. Drew, your turn.
I am Drew. I'm from Singapore. I have some interest in geopolitics and this is one topic that I have some knowledge of. So hopefully I can help. Prata?
So I'm Prata do Povo, so from Portugal, currently living in Germany as well, so it's a bit mixed with Europe all over. Yes, geopolitics like the DPA Europe channel, we have been mainly focused on geopolitics, and it's our main interest. That's what we are going to do today with BRICS, some of the most promising engines of change for the next years. Sure.
Yeah, I'm Shu. I'm from Hong Kong. It's always good to talk to people around the world, so hope this is an interesting talk.
All right, so I think I'll just kick us off then. There's been a lot of talk, as we can see here on the shirt screen, BRICS Summit coming up, we're going to have a common currency. What is that currency going to look like? But we're also seeing that some other contradictory statements. For example, South Africa states that they won't be discussing a common currency. They will be instead discussing more bilateral trade, which is what they have already been doing and is to be expected. But, it's again, the Russians say we're going to have a common currency. The South Africans seems to be a little bit hesitant. And then later we have India, which states that no common currency is really on the table. Though the thing with India seems to be a lot of posturing for people here in the West, kind of a little bit obscure, kind of what's going on. To keep, for sake of brevity and sanity, I'm going to pass it over to Drew. And the question here is, we keep hearing all this talk about the common currency. And I wondered if you could please outline why you would think the BRICS would make a common currency and what it would look like. And also maybe what ties to what the Indians have alluded to, namely no currency. Why would they not make a common currency? And from that, maybe surmise what we can expect based on that from the summit. Yeah.
I don't think the statements are actually contradictory. What India said was that there will be no BRICS reserve currency to actually challenge the US dollar, that the dollar will continue to be the world's reserve currency. And that's true because what Lavrov is saying, they are going to consider a common currency, and this currency is actually going to be used within BRICS for trade between the BRICS partners. that's why we see more than 40 countries who want to jump into this trade union, basically, so that they can trade with this new currency and that would help them all their bilateral trade within the currency union. So the whole idea of the new currency is not to take over as the reserve currency. So India is right. The whole idea of the new currency is to have a common currency that if all the other people join, then all the other countries join, then 40 over countries will be able to trade with each other. And with this kind of common currency for them to trade with each other, then they don't need to use the US dollar anymore. They don't need to suffer the risk of the US continuing to print US dollars and devaluing whatever reserves they hold in US dollars. So they would then have a currency which is more or less tied to a basket of either commodities or a basket of currencies, and that's to be decided how they value this new currency, and which they then have some control over themselves, or in terms of the liquidity, the availability of this currency, and how the mechanisms for exchanging goods. So, for example, right now, if China wants to buy oil from Russia, China might pay yuan to Russia, and then Russia then has a bunch of yuan, and then Russia doesn't want to buy anything from China. For example, he wants to buy maybe some goods from India. So then Russia needs to then convince India to take yuan. So India might not want yuan. He might want to, they might want to conduct the trade in rupees and rubles, one or the other. So it's a bit difficult for them to do that trade right now. Whereas if you have a common currency, everybody just uses the same current currency. So that gets rid of the problem having one specific currency, too much of one specific currency and too little of some other currency. Yeah.
So basically, we're talking about like a dollar in a limited sense, a regional dollar, if you like, that is maybe not even used on the streets. It's more like a denominator, a unit of account for countries to, like, okay, we have been trading this and that, and because of these currencies are tied to this common currency, and it's also stabilized. Can it be both? Can we be pegged to both currencies and commodities?
I don't think so. Okay, the thing you need to consider is, for example, right now, if you want to buy an apple, you know how much an apple costs in your local currency. Because there's an exchange rate between your local currency and the US dollar, you know how much the apple costs in the US dollars as well, right? So in this new currency, if they come up with it, how much is it worth? How much is an apple worth in this new currency? So if I want to buy 1 million apples from China, how much do I have to pay him? So the problem here is, how do we find a pricing mechanism for this new currency? Like, it's not going to be easy because right now, the price of Apple is based on demand and supply and global foreign exchange rates, right? It's freely traded, most of it, and then you decide the price of Apple based on how many people want to buy it, how many people want to sell it, right? How do you recreate this mechanism in a currency that's only used within the BRICS union? So this is the question that I think is going to be difficult to answer. If they peg it to a basket of currencies, it's easier because you can determine the value of this currency from the basket of currencies, which would be BRICS currencies. The other option is you peg it to a bunch of commodities. So based on the value of commodities, you derive the value of this $1, right? But the peg to gold as separately, that is a separate problem. The pegging to a gold doesn't really give it. It gives it more how do you call it? More like security. Like if you have say 5,000 of this currency, you can exchange this 5,000 for 1 ounce of gold. So then they will go to like the Shanghai Gold Exchange, and then they would present 5,000 of this currency and they'll get one piece of gold back. So that is more for like security. Whereas if it's packed into a basket of currencies or basket of commodities, then it's more for pricing mechanism to try to find the price of this new currency. It's a little bit of nuance there.
So just to kind of clarify if I understand you, so basically what you're saying, when we're talking about gold, it's sort of more like it's literally just then a store of value you exchange for money. Like it's a way to just store money, really. And it has a money value that is assessed by market and so forth, but it's not something that, so for example, you wouldn't necessarily care to peg your currency on gold by itself unless you wanted it to be used as a reference point. And you thought that the gold market prices were so stable that would be fine. Whereas on a commodity, that is really on the pricing range they go by. It's not, you cannot necessarily store that as to a large extent to have money in the same way as gold. Have I got this right?
Yeah, because the reason here is gold is not a stable store of value. It's a store of value, but it's not stable. The price goes up down quite a lot. But if you have a basket of currencies, commodities, then it's a lot more stable. Even though the prices of the commodities go up and down, it doesn't do that much, as a basket, especially if you spread it wide enough. So it's more useful as called a determination of value. If you peg it against a basket.
So when Russia, for example, did some, I think they pegged the ruble to gold to some extent, because it is a store of value. Like it's basically the same money as you have, but in a different form. That is, so it kind of as a security. So can one by extension, I'm speculating here, but like. Would it be unfeasible, for example, for during the BRICS summit or any other summit they have on the currency, they would be having an agreement that, for example, any member country that is to be operating with this common currency, which may be actually pegged to a basket of currencies, but all these respective currencies must be also in part pegged to, for example, gold and commodities, for example. Could that be a setup that they might be construing?
Not necessarily. So, for example, today, a lot of the currencies in the BRICS nations are not pegged to anything, right? So, for example, let's take a scenario where the new currency is pegged to a basket of commodities. So, for example, it derives its value from like a ton of wheat, a ton of gold, a ton of oil, and so on and so forth, right? So that kind of keeps its value, that allows for a pricing mechanism, but also kind of keeps its value fairly stable, because if you have a wide basket of commodities, the price isn't going to fluctuate so much. Then, if they have a bunch of this money, like for example, China sells a bunch of its, I don't know what does China make, drones to Ukraine and to Russia, and then it gets a bunch of this, and then it doesn't want to then use this to buy from somebody else. It can then go to some exchange, because this bunch of new currencies already pegged to a bunch of commodities, so you know the price of it. So you can then go to the Shanghai Gold Exchange, and then exchange this for gold, and it's actually that is what you can get physical gold with it. So that's what some African countries have already done with their Chinese yuan. So they have a bunch of Chinese yuan. They don't know what to do with it. They go to the Shanghai Gold Exchange, and then they exchange it for gold, and then they take the gold, go back to their countries, and put it in a vault somewhere.
Well, that's very interesting, but I would point out that the most important thing here is that they need the BRICS in order to achieve any type of currency. They need to achieve a certain level of trade between each others. And one of the things I noticed between almost all the intervenients at the moment now is that Russia always have a positive balance of payment with these countries, which means they always would have to receive more. So, or they invest the money that the difference on the positive part of it, they invest it in these other countries. So balancing the balance of payment to be zero. And if they could do that, then we would have a probable payment system that would allow to exchange with their coins, their national coins, the difference. Because one of the things that Lavrov said is that most of the countries, they have coins, they are very volatile between each others, and this makes it difficult. So they need to create a payment system that some kind equilibrates the situation. So what I thought it was probably is like, in order to store value, they would, instead of keeping huge amounts of rupees or reais or rubles, they would try to store that positive amounts at a certain time in that BRICS currency, allowing it to stabilize a bit. Because if we are buying and selling at the same time, there is no problem. The problem is when we have to store value. Sorry, Drew.
Yeah, it's two separate problems. So you're right. In any kind of trading system, if one country is selling more to the rest and providing valuable goods to the rest and not receiving, it's going to have a lot of this currency sitting by. So there needs to be a mechanism for them to then convert this currency into something that they can find useful. And if there is already pegged to a value of something like gold, for example, they can then convert it to gold. And then they can even take this gold outside the BRICS system, convert it back to US dollars, and then use that to trade with the West if they want to, right? So as long as there's a pricing mechanism that everybody agrees with, that everybody will respect within the BRICS, then that's not a problem. The problem is getting to that point. You know, some people would want to price, because if Russia is, for example, a major producer of wheat, they will want a higher percentage of wheat to count towards the value of that thing, because they are producing, it's like them producing free money, right? So if, for example, an African country has a large source of diamonds, they will want diamonds to be part of that. So there will be a lot of negotiation going on to determine and what is the makeup of the basket, and also what percentage of each commodity will then contribute to the value of this thing. And also, at what interval will they do? Because every time you have a basket of something that's tied to something, you need like regular intervals to review the basket to see that it's still relevant. So how often do they need to review this? So all of this requires a lot of cooperation between the foreign ministries and the economic ministers to then sit down. This is going to take a long time. It's going to take years. This is not going to happen at this BRICS summit, I don't think. They are just starting to talk about it, you know. So this will take a long time. Yeah, Shi?
Yeah. So yeah, very good. I think the thing that always confuses me is like how further integration with other members will be, right? Because BRICS, I believe, primarily does most of its financial things through the New Development Bank, and the shares are currently split amongst the 5 members, right? Like South Africa, Brazil, Russia, India, China all have 20% stakeholder. And yeah, I agree with Drew. Like, if it's a basket of commodities, like any ledger, you need good input, right? And the prices will fluctuate. And it's interesting because unlike the US dollar, like modern monetary theory system, where there's one issuer, it seems like it's going to be a collaborative kind of like put together of data to create this like currency. So it'll be quite interesting, and I think it'll be very complex, and it's going to be tough to not only deploy initially, but with the other smaller countries joining in, like how do they kind of weigh in? Yeah.
I mean, right now there are 40 countries are looking to join, right? So it'll be quite interesting to see how many they let in this time. You know, how many they will announce. Is it 2? Is it 5? Do they let all 40 in? I think it's going to be a mess if they let all 40 in. They don't have the structure for it. So maybe they're going to let in 2 and then another 2 a few months later, you know, and then create like a mechanism for absorbing more members. I don't know.
I thought that actually segues into a fairly good part of the topic that I wanted to address. And that was new members, and most likely, I think the newest members, the new members that we're likely to get sooner are those in the Middle East, Saudi Arabia in particular, for pretty self-evident reasons. But there's strategic importance is very hard to ignore. But it's also that they also check the boxes. They have like all the criteria that BRICS requires. It's much easier for them to fulfill. Like Nigeria have the issues with corruption, and South Africa, and that's an issue for BRICS now with South Africa, who's they've had increasing power outages, and with that has affected their industry. Now, South Africa is the most industrial nation on the African continent, and their export market is tied to it. So when what happens is that their currency is actually depreciating. The SAR is depreciating because they are able to produce less. And so, usually when the currency depreciates, it's easier to export. But in this case, it's actually depreciating because their capacity is going down. And the thing here is that they have already been offered a loan. Now, like you can say, the inclusion of Saudi Arabia would provide a lot of fresh capital that would solve it. But the thing with South Africa, and why you wouldn't, for example, admit Nigeria, is because BRICS have already provided, I think it was a $10 billion loan to South Africa several years ago to solve this, to refresh their electricity infrastructure, and it still keeps going downhill. So what kind of extraordinary measures would a BRICS bank take, for example, is one question I ask myself. Economic restructuring is something we associate with the IMF, but would, for example, the BRICS be doing some sort of restructuring? And if so, would they actually do it first and foremost on a founding member like South Africa? Because I think that pertains to new members as well. Yeah, I'm sorry if I went on a ramble. Yeah, just pick it up where you want it.
I'm not sure. Okay, the one reason for a country's currency to tank over the years is basically demand for the currency drops. Why does demand drop? Because the country itself is not producing stuff that other people want to buy. So people don't have to buy that currency to buy their goods. Or there's lack of foreign investment, so no new money comes in. So like companies don't need to buy large quantities of that money. So and people see that the economy is not doing so well, so they pull their money out, they convert the local rand into US dollars. So a lot of reasons for the movement of currencies, prices of currencies. So it's not just that they are doing poorly. I mean, you can go and talk to a currency trader. He'll tell you like there are 100 things that they look out for at any one time. Their whole websites are dedicated to this. Where there are whole calendars of events, and then people will put bets on each of those events. So it's not so straightforward when you see a currency going down. And a lot of the justification that people come up with trying to say why a currency went up or down, it's done post the event. So it's just it's not. Half of it could be true, could be false. It's just somebody trying to rationalize that event. So I wouldn't take the currency dropping as a big indicator. It's an overall indicator that the demand for the currency is dropping, but you don't know why, right?
The reason I've heard that argument being the reason for South Africa's currency going down is because it's been very consistent over the years, and it strongly correlates with the load shedding. So, but like you said, there's probably 1,000 things to it. Plata, sorry.
I was going to ask you, do you think it would be possible, when we were talking about this basket, what if a country monetize a future in the sense of, for instance, South Africa produce a lot of minerals, diamonds, golds, whatever, and before the gold is produced, they could go to the central bank, give a future of those of that production, and monetize it. it gets the money. Somewhere in time, the merchandise will be produced, it will be transformed into money, and would repay back to the central bank. So that's why when they talk about I can imagine they putting gold in vaults, but I can't imagine they putting barrels of oil in the vaults. So what if this idea of commodities is a kind of a future that will be paid at a certain time?
No, there are futures markets for oil as well as a lot of commodities. So, for example, how the futures market works, like you explained very, very, very clearly, is I think I'm going to produce, have a production for example, I'm a farmer. I want to plant this wheat, but I need money to buy the seeds, buy the fertilizer, hire the workers, whatever. So I don't, and I'm not sure if by the end of the planting season, whether the price will be up or down. So if it goes down, I might go bankrupt. So right now, the price, for example, is $1 for a bushel of wheat, for example. So I go to the futures market and I say, okay, I will produce this. I will produce this field of wheat, and then I will deliver to this warehouse on this date at this time, and then this is the price I will pay for. So they don't get the money yet, but they are ensured that if they manage to produce this amount and deliver to that, that's the price they'll get paid for. So they go and do whatever they need to. They take a loan from a bank, they go plant the seeds, hire the workers, whatever. At the end of that period, they put the wheat in the designated warehouse, then they collect the money. In the meantime, traders are trading the price of the futures up and down. So what you're talking about is already a very common practice. It doesn't need the BRICS to come in. They do it for their futures for gold, oil, wheat, cotton, copper, but all the commodities.
It would be a way of a country to get money without actually getting money from the markets. So, but directly
they don't get money. They don't get money when they sell the futures contract. When they set up the futures contract, it says you will pay them when they deliver the goods. So only when they deliver the goods will they get the money. What is fixed is the price.
Right. But and in that sense, it's not a future. It is a monetization of something that will going to be produced. That was my idea. So the same way that
it's a price setting. It's just a prearranged price
fixing. Yes, it's fixing the price.
Fixing the price, but at the same time, you get the money from the bank without ever sold a future in that sense. It's just, it will be paid at the same moment as that, for instance, that amount of oil is going to be sold.
No, it's a separate transaction. So the creation of futures is creation of futures. The borrowing from the bank is borrowing from the bank. But if you have created futures already, then the bank will more likely lend it to you because the bank will see that you have this collateral, this fixed price, so it knows you can pay it back. So maybe the interest rate on the loan will be lower and more likely for them to lend it to you if you have already created the contract. But it's a two separate thing.
Speaking of collateral and bringing us a little bit back to the thing about gold as a unit of account and in terms of the commodity-based currency and pegging it with gold and such. I was wondering if that would change the incentive structure for, like you said, let's say a country that has a lot of gold reserves. Would that be of interest for the BRICS countries to focus their development programs on? Here I'm not talking about some sort of nefarious planning or anything. I'm thinking because it seems like they're trying to set up a system where their own self-interests are also operating in a mutual interest as well. So they find, in just in the same way as the IMF, in a sense, also operates like that, where they have so many debts and then they have so many creditors, right, who go in on it, and they don't necessarily, let's gangbang this country. It's just now a political situation has made it so. And so I kind of wondered, like, would something similar, like, I have a hard time imagining that there won't be some sort of similar dynamic going on with the BRICS countries when they are, for example, contemplating where would we be putting our finances here for development. And it could be a potential new member. So let's say it was Ghana, which has a fairly small economy. It's heavily indebted, but even though it's very heavily indebted, it's still a fairly small economy. Like for BRICS nations, it's actually fairly easy to kind of just like wipe out their debt, and they're like, no, you work with us. They have 90% of their gold mines are owned by foreign, mostly American and Canadian companies. So they, would their gold reserves, because I think they're number 7 or 6. So for being that tiny country, that's what it makes it so. I imagine it that the BRICS alliance, if they have an incentive to acquire solid gold reserves and also just to have it, then Ghana would seem like one of the most likely places for them to direct the BRICS Bank, the NDB, New Development Bank, to wipe out their debts, help them buy back their public assets, and maybe also have it within the BRICS consortium, within that BRICS Bank, where all the members who kind of jumped in on that will get a return on investment. I hope you understand what I'm trying to ask you here.
I guess so, but I don't think so, because the whole point of a multipolar world is everybody looks after their own interests, right? If you are thinking the BRICS nations are going to be like this white horse that's going to run around trying to save all the African nations, that's not going to happen. They are all trying to play on an equal playing field, I think. So for a country that's already heavily indebted and has sold off a lot of its, for example, gold production facilities, they might want to borrow from the development bank, the BRICS Development Bank, to buy back this, but that's on them. I don't think the BRICS, the bank itself is going to then consider, is this a good loan? Is it going to be profitable, or what is the chances of them getting paid and getting back there? Having said that, China has a good track record of actually first giving interest-free loans because it had too much US dollars, so it didn't know what to do with it. So we actually gave a bunch of interest-free loans in US dollars to a bunch of countries, and then when they couldn't repay, it actually forgave the debt for a lot of these. So there is a precedent to it, but I don't think it should be something that people say it's going to happen going forward. Like it's not something to expect, right? And it's nice.
It's sort of along the lines of what you're saying, because it's not a matter of this knight in shining armor mentality, but it's more like if they have all the countries that are part of BRICS have gold-pegged currencies, and they can secure their currencies alongside with the BRICS currency because it's all pegged to gold, and they all increase their gold reserves and can secure it better. They might be interested in okay, so, we have this and this applicant, but this applicant here has a vast amount of gold reserve production facilities, which we can we can buy back in part for them and get political capital, and we can also get back for us in order to secure our own reserves. Basically doing like China's done, because it's again, China's been operating on their own self-interest. They seem like they're very helpful, but it's really just that their deals don't even have to be really bad, because the Western deals are so absolutely horrendous, right? So it's they don't have to. So that's what I'm thinking. If you see that, the reason I'm asking really, it has to do. Is there an implication if you start having a gold-pegged currency? Would the country start acting differently? And if you care to touch on that on the commodity part, if you feel like it.
Okay, I'll keep my answer short and then let Shi go, because he's been waiting for a long time.
Yeah.
I think the only reason if any of the BRICS currencies would want to go to a country with a lot of gold mines to help them get out of anything is if they consider that the price of gold is going to go up for whatever reason. So they see a kind of they look forward and see the valuation of gold is too low now, and they want to secure a source of gold when the price goes up. That's the only reason I see any of them doing that. So yeah, Shi?
Yeah, I have a question, right? So let's say we do have a BRICS currency that's based on commodities. Probably energy will be a big part of it. But just like how we see with situations with OPEC, or maybe OPEC Plus, where there's a certain country who decides to flood the market with that commodity, like given that a lot of our economies work on like money issuance, money supply, modern monetary theory, like how would you see, like, is there going to be a centralized punitive kind of mechanism to make sure people don't do that? Or is it going to be similar to what's happening now, where Russia tells OPEC what they're planning to produce, but in the background, they're flooding it with like unregistered or like unaccounted for oil, which kind of changes the price of the commodity. So will that kind of be a fracture point, as there doesn't seem to be like a centralized authority like the United States that can go around and sanction or adjust things? That's my question.
I think the system will be more or less the same. To have a punitive system, basically you're looking at the court of law that all of them sign up to, and that is you'll be like the Hague International Criminal Justice thing, and that's always very international law is always there's no such thing as binding international law, because there's always an enforcement problem. So if, for example, a court of law decides, okay, this country needs to pay whatever amount to the other country, and this country just says, no, I'm not going to pay. Who's going to enforce that? Who has, the country with the biggest army will then be able to basically decide what is the law. So it is this whole idea about having an international law is just smoke and mirrors. Is at the end of the day, it needs to be countries either on a multilateral or bilateral mechanism to talk to each other to agree what is the right way. And if one country tries to cheat the system, the other countries just simply don't want to trade with them. And that is basically what's happening now with the BRICS. They realize the West is kind of cheating them, so they are all getting together to trade among themselves, and they're just going to ignore the West and trade with them when it's profitable, and if it's not, they're just going to ignore them. So that's how countries operate. This whole international law thing is smoke and mirrors. Yeah.
I find it also very interesting, and an announcement from the new central bank, that they want to get rid of the LIBOR interest rate. And actually it was just on 1st of July. They don't use the LIBOR anymore. They still use Euribor, but not LIBOR. And they want to create, or already created actually, a kind of interest rate standard that the SFOR that will in the future regulate their interest rates in their loans on other currencies that not the euro, because for the euro they will still continue to use the Euribor. What I think it was very interesting, the excuse was that the Euribor is more or less transparent, so they know how it was calculated, but they are like accusing LIBOR of being manipulated in a way. And so what I realize is that what the BRICS really want is more fairness in the system. We see the flaws of the system we have, but perhaps they can create a system where somehow the flaws of the past of the other system are a bit more controlled, more transparent. No, they want to have a payment system where a single country or institution is not able to block those payments. They want to create a system of loaning where the interest rates are not manipulated, where perhaps the way that these loans are given is not like Coping was saying, that in somehow there needs to be an instrument like the FME of control that is sometimes very arbitrary. You know, like what we see many of the FME recovery programs doing exactly the opposite, destroying even more the countries they were supposed to save from a bad situation. How do you see that?
I think, well, the LIBOR, they already had a case where there was a whole bunch of the bank, the bank managers. If you can, whoever's controlling the screen can just Google the LIBOR fraud, and I think it will come up where it was being manipulated. So the rate of the LIBOR was being manipulated by a bunch of all these bank managers who came together and decided that they want to change the rates. Yeah. So the fear of the BRICS currencies is BRICS countries that the LIBOR is being manipulated. It's true. It's not conspiracy. There's already a court case, and those bunch of bank people got fired and whatnot. So I think interest rates is always tricky because right now everybody looks to the Federal Reserve in the US and then tries to kind of react to whatever the Federal Reserve is doing. Eventually, if and when the Federal Reserve and the US economy becomes less and less influential, I think it will become more of a, and every country has their own, has full control again of their own interest rate regime. It will be, it will again act in a multipolar way. Like, if a country wants to push more exports, then it would, you'll try to, it wants to attract more foreign investment and more growth, then you'll try to lower its interest rates to push out inflation. But if inflation is too high, then they want to raise interest rates. It's this kind of things that the central bank governors would consider instead of just trying to react to whatever the US Fed is doing. So I think it will just be that. Yeah, I don't think there will be a central they might set up because if the BRICS countries, they are very diverse. You see, their economies are very diverse. So one central bank determining the interest rate for the entire BRICS nations is really difficult to. I don't see that happening. Look at the amount of trouble that the European Union went through to try to eventually come together, and then Spain is shouting that the interest rates are too low, and then Germany is the interest rates are too high, and then because each economy, depending on where they are, want different interest rates. Those that want growth want low interest rates. Those that want to fight inflation want high interest rates. So, yeah.
If I may point out one thing, which adds a little bit, I guess, to what you were saying regarding why they, when they want to have a common currency, it will be in a very limited sense because, and as far as I get it, pertains a little bit to what you said about how China offloaded a bunch of excess dollars, because as far as I get it, they actually try to, as much as they can, sell their commodities in dollars so that they don't overheat their own currency. As far as I get, if they cannot really replace the dollar without hitting themselves, because if the yuan starts becoming a reserve currency and invoice and so forth, it's going to be a higher demand for it, and that's going to appreciate its value. And if the value of Chinese yuan appreciates, that's going to hurt their export market, which is really their thing. And so I kind of get the impression that the BRICS currency is yet another way for them to be offloading. Then it would that be kind of and also it would be, like you said, none of the other countries want the others to be able to control each other excessively. And if there is any country who can really control any other country among the BRICS members, that's without a doubt China, who constitutes, I think it was 70% of all industrial output and GDP. And yeah, so
so I think that there are two things that I want to say to that is, first is this term common currency brings to the idea that all these BRICS nations are going to come up with one currency and everybody just uses the same currency, and forget about their own currencies. That's not going to happen. Their currencies are going to stay. The yuan is going to be there. The rupee is going to be there. The ruble is going to be there. This new currency is just for trading among the BRICS currencies. Their own currencies are still going to be there, right? So the other point is that the China doesn't want the US currency to go away. China has done very, very well in this system where the US led economic system, and it wants the current system to continue. But it is also sees that because with stability and trade, China is getting stronger, right? So, but it also sees the risk, US has been funding a lot of interventions within China and much of the rest of the world to destabilize it. So it sees a risk of and it needs to move away from that risk, right? I mean, if China considered the US an enemy, it would not be the second largest holder of US debt overseas. It just wouldn't. I mean, if I see coping you as an enemy, would I help you to fund your economy? That's silly. That's not going to happen, right? So, and China isn't even the one that's leading the way in terms of de-dollarization because China has such a huge amount of US debt. So when they start selling a little bit, everybody panics because hey, China is selling a lot. But if you look at the trend of China selling it, it's actually much slower than the chart of the percentage of total US debt held by foreign currencies. So I think it's something like within 10 years, US total amount of debt, foreign debt held by, total amount of US debt held by foreign currencies was something like 33%. And then in 10 years, it fell to like 22%, right? So that's like a drop of like a third, like 10%, 11% for just 10 years. For China, it dropped like I think 8% or something within that same period.
Yeah,
so China is de-dollarizing at a slower rate than the rest of the world.
I recall I paid attention to that. I recall I paid attention to that for our during our de-dollarization panel and then sometime after, and oh shit! I forgot to say it's getting late. Oh no, I'm sorry. It just wiped out of my head. I was oh yeah, the depth. Sorry, yeah. I recall that you said 8%. It was actually around 10% at first, and then it bumped back to being like something like that. It was because what they had done was that they had sold the U.S. Treasuries and exchanged that the equivalent amount to gold, and that was like 200-300 billion. I forgot the number, but they did buy back like 80-something billion in somewhat more risky debt. So to me, that strikes me as like they weren't really keen on getting out of the debt market. They just want to get more, like have less money there, but have still the same yields and try to compensate. And like, okay, if it, but like you said, the total, selling of debt, yeah, it's huge because they already had the biggest debt in the world next to Japan.
Japan is the highest holder. So when you talk about US debt, there are also many different kinds, like you say. So China has been selling a lot of the treasury bonds, which is the bonds that are issued by the government of the central government of the US. But they have been buying a lot of municipal bonds. So that's the bonds that are issued by the individual states, and also bonds that are issued by the US companies, for example. So they are also chasing yield. Yeah, so they're acting like a capitalist company. They want more growth for the money that they have, and they have also had to consider risk. They have to manage their risk. So, if, for example, the US starts to sanction China, all the money that China has bought in terms of treasury bonds, all the debt sits in a ledger in the US. So the US, if they decide to sanction China, they can just in one fell swoop say, whoop, that's all your money gone. All your, so they need to diversify from that. It's a risk. So it's typical risk management, So,
excuse me to cut you, but so could you explain me with this chart what the United Kingdom is doing?
What the United Kingdom is doing?
Look at the chart I'm showing.
It's buying more. Okay, it's buying more foreign debt. Yeah, good.
From USA.
Well, I
Yeah.
think it's interesting to note that the Japan and China, which were the biggest holders, have actually gone down by 2023, but everyone else on that chart have gradually gone up, especially the United Kingdom. So yeah,
Yes.
would you know
Yes,
what
I
that is?
think I think we can explain it, but in order, when Drew was saying, I think everybody perceives the risks in the non-Western world that the dollar means, and when the West sanctioned the international reserves of Russia, everybody realized, opened their eyes, and said, "We are next," because we have been sanctioned one way or another. Or because Brazil, for instance, have been saying there was these currency wars in 2011 where they lost a huge amount of money trying to maintain some stability in the market, and they lost a lot of their international reserves trying to hold the real. So in these situations, I think many countries perceive if the dollar is reduced to a more equitable situation, that it's their economy, because they are still one of the biggest economies in the world, and the percentage of that weight of that economy also repercutes in the way that they need to use dollar, and not more than that. That means that the West will be taken out of that weapon. They won't be able to use it anymore, because otherwise they will suffer even more. It's like a perverse effect. Now they don't have that perverse effect yet. Well, they have a lot of inflation, so that's also to consider. It's like it's a generalized feeling. Of course, there might be some countries that want some revenge for past situations, but I don't think it's the general the most of. It's not the general sense of feeling behind the need to diversify.
Yeah, it's risk management. I think every country needs to look to their own security. And right now, after, like you said, after Russia got sanctioned by the US, it's not secure to hold US debt anymore, because you can lose all of that in overnight, just like that, just because you decided to do something the US doesn't like. So anybody in their right mind needs to get out from and over. No one's going to get out totally, because the US is still the reserve currency. So they still need US dollars to buy a lot of things, to import things, right? So, but people are going to start reducing and keep a certain amount, but keep the rest in other things like commodities.
This one is funny. Cayman Island. I'm sorry, but what is this?
It's an offshore paradise.
Yes, I know, but it's really strange. They have more US debt than I don't know Saudi Arabia.
Speaking of Saudi Arabia, I wanted to actually ask regarding we're talking about consequences and stuff like that. Bringing this back to China wouldn't want to have a currency to replace the dollar, because it actually benefits very well to have the system as it is. It also has it's increasing economic power, probably just means it's even more conducive to have the BRICS currency as an additional way to go about it. But I want it's trying to do that to avoid too much demand and trade with its own currency. And I wondered here, are there any repercussions for China by having Saudi Arabia having its trade done in the yuan when it comes to oil, and also that Saudi Arabia has officially dedicated that for the next so many years they're not going to prioritize supplying the United States, they're going to prioritize supplying China. Would it be any, when we're talking about commodities, could you see that being a thing that they would have to navigate through in the summit, because maybe Saudi Arabia will be added, for example, or because China is trading in yuan, that might make any currency discussion problematic? Or
well, I'm not sure this is a China thing, because what started it was Saudi Arabia's foreign minister announced that Saudi Arabia is willing to sell its oil in non-US dollar denominated currencies. So China was one of the first to say, me, sell it to me in yuan, and Saudi Arabia did it. So I think any other country can now go to Saudi Arabia and say, well, India can go there and say, sell it to me rupees, but of course India is like now is buying Russian oil and selling it on to Saudi Arabia, so it doesn't need to do that. But I think other countries can do that, and I think from Saudi Arabia's point of view, they also want to be they also need to look out for their own security, and right now China is their biggest customer for oil. So why would you want to piss off your biggest customer for the US, which doesn't actually need your oil? US has its own supply if it wanted to, right? So for any business, any company would prioritize its largest customer, which is right now China. And if that changes, then they would.
But I kind of assume, to me, it would strike me that Saudi Arabia wouldn't just be allowing any other country to be trading with oil, because China, okay, because there you can also get a return. You can use the yuan, for example, or whatever, to buy the commodity, so forth. But you can't necessarily do that with, I don't know, many other countries.
So this brings us to this whole common currency thing, right? So if the new common currency comes up, Saudi Arabia will just sell its oil in this new common currency, which it can then use to go and buy other things from other people. So it's great. It's great for Saudi Arabia to do that. For the new common currency to come about.
How do you see it working in the payments? How the payments are affected? So what we were talking about is mostly still using the SWIFT system. Well, with the exception of Russia, obviously, for the reasons we know. But do you see really the need for an alternative payment system that also can't be triggered by the US, or that needs to use the Forex in order to complete the transaction or clear the transaction?
I'm not sure. Right now, China has its own payment system. Russia has its own payment system. And the one that is really spreading very quickly is China's UnionPay. And so I guess they can just use China's. I don't hear any talk of them setting up a new one. Like I have not heard of any talk about them setting up a new one. They're just using China's UnionPay, I think.
I would suggest that actually what is going to happen is that these different national payment systems are going to be interacted. So there is already a connection between Mir and UnionPay. Russia is actually negotiating a connection to the the Indian I've forgotten the name, the RU Pay system, and also quite interesting, Indonesia, which sounds like after all this happened, they decided they also need their own payment system because they're completely in the hands. Yes, they are completely in the hands of MasterCard and Visa, and they realize how dangerous that is. So now they want to introduce their payment system. They actually asked help from the Russians. It will be pretty much Mir, but translated to Bahasa, Indonesia. I don't know. I heard some. It's very hard to find news actually about these things. But the thing I heard is that they are very keen in connecting it with different ones. So they are negotiating with India to connect their root system and their new payment system as well. So I think this could be also what we could be seeing, is that there is not an universal a single one common payment system, but they find ways of connecting the different payment systems, and in that way there is no supranational entity that could control it or manipulate the system or even sanction any of the involved parts.
Yeah, so if you look at your own credit card, you can see multiple payment systems on it now. Today they're already doing it, so.
Yeah, so I'm just going to remind you, yes, thank you, Shadowy, for putting the clock up there. So we are starting to round the hour here, and I think it's, Shu or Shadowy maybe have any more questions for Drew, and let him answer it, and then we take a round of closing. So Shu, do you have any questions?
I have a question with the answer of yes or no from Drew. Are they going to announce the new currency at the next summit or not? Yes or no?
This summit? No.
Yes. Okay, that's all.
No way.
It was not closing.
Yeah.
It's going to take years to even attempt it. So, yeah.
Okay. And my question is, if Drew, you were in charge of the United States financial system, like what moves would you be positioning yourself into to kind of prepare for this outcome to make sure the U.S. remains as durable as they can
I
to weather the
think
storm?
that should be another question for another hour of discussion.
Maybe. Yeah.
I would quit my job and go buy a cabin in the woods and hide.
In Siberia.
US economy is...
I recommend Siberia. We have a good friend there. Siberia is a good idea.
Well, if I was a U.S. citizen, I'll go hide in Alaska. It's tough because they're printing their way into hyperinflation. It has always been my the U.S. Produces a lot of services, like overpriced services that so a large part of its economy is like in overpriced medicine, overpriced healthcare, overpriced financial services, and so on and so forth. So there's the way I would save the U.S. economy is to stop the wars, take that money, invest it in their public education, get the people educated, and in about 10 or 20 years, when they have the real skills, like skills that are demanded by the rest of the world, then they can then develop their economy in a real way, like have a real economy that produces high tech things like maybe chips or planes or whatever, right? And then you have things to sell to other people, and then when you have things to sell to other people, your trade balance will start coming down. You can start saving money and reducing your debts and things like that. But in the meantime, they're just printing money to pay off the debt, or they're inflating all the debt away. That's their strategy. But when you do that, you're going to cause inflation to your own people. And that's
so the short answer is you begin by education.
Stop the wars. I mean, you're spending trillions of dollars overseas for nothing. Yeah, it's
okay. Stop the wars first, education second. Okay.
Yeah, and then invest it in the US. Take the money and put it in the US. Create jobs, education, and yeah. But that's a long-term strategy, and the US is never going to do it because their politicians last 5 years or 4 years. So they all they're looking for is short-term.
Yes.
And that's you can't implement a long-term strategy with a short-term political system. It's not going to happen.
So, Prata, your turn.
I think I already did it. Perhaps I will start with the closing, mine. I would like to say the BRICS, there is a lot of expectation about the BRICS, and somehow this hyper expectation is going to be a bit frustrated, unfortunately. The BRICS do manage amazing things in so little time, which is very good. But what people sometimes expect them to achieve, it's a bit supernatural. So I would expect. I see, like, for instance, many of the reactions on to 1 month of the summit to happen. I see that many people are just bombarding a bit the media with little information. Like Drew said, perhaps everything, it's not really a contradiction. It just depends on from what prism you see it. But they probably will announce they have the intention of creating a payment system and their own currency. Will be interesting to see if they say something further. But that is not the concretization of it. And also, in some conversations I'm having with Shadovi, perhaps they are not even might even try to disassociate it from the BRICS, creating a new association, new institution that could then deal with these other situations and maintaining the BRICS as it is. Also because of the question, how many people will be allowed to get in? Well, Drew made a kind of irony about it, which is great. Well, is it going to be 2 or 40 at once? It's probably not going to be more than 5, and that will be very complicated because there are so many countries expecting too much from it that if they are not allowed in, that will create also a bit of resentment. So they are really placed in a difficult situation. But we should expect from BRICS what they are. They are mostly a diplomatic consultation group of people. They are not an organization. They don't have a secretary general. They are just actually a group of countries that pass from year to year the presidential to the different countries, and each country organize what they have to do. So what we are going to see this year are the preoccupations of South Africa in the world being mirrored on that summit. It will be very interesting, but we should look at BRICS for what they are and not for what we wish for them to be.
I guess I can do my closing. I think for this summit, no, they're not going. They're going to talk about, discuss among each other whether setting up a common currency is for trade is feasible, and then maybe agree to set up working groups and that kind of thing, right? Because these are the heads of states. They're not going to go into all the details, right? They're going to just set up a future working group so their finance ministries can come together and do that. So I think the biggest news that's going to come out would likely be that they will let in both Iran and Saudi Arabia, because those two, Saudi Arabia has huge oil reserves and Iran has the world's second largest gas reserves. So, China would love to have these in because it would love to, buy in a simple way, to be able to buy all these commodities from these various countries, right? So I think those two would be the first to get in. Whether more will get in, I'm not so sure. Maybe, it really is each country that comes in, it needs to bring something to the group, right? If they just want to come in and just leech off the rest of it, they're not going to be let in. So Saudi Arabia brings oil, Iran brings gas. What do the other countries bring in?
Great perspective.
Sure.
Oh, she?
Yeah. So, thank you, Drew, for your very insightful and in-depth, and thank you, everybody, for those questions. I think everybody has a lot to learn, and in terms of just looking forward to the BRICS, I guess we are at a very exciting time in terms of geopolitics, economics, and kind of just how the world functions in general. So, I'll be watching very carefully. We'll see what happens from this summit, and hopefully everybody kind of enjoyed this kind of talk. Like, you guys should definitely come in, people in the lounge, to discuss with us. It's a very friendly, very cooperative environment to discuss things. And that's it for me.
Thank you.
So do we.
Oh, I just closed. I just have add a question for Drew on the answer. I'm finished.
Okay.
Your turn, copying.
Well, in that case, I must perhaps apologize to the audience that we have to cut it so short. We could definitely have gone on and talked a lot about things, not just currency. We could have gone more on the commodity and so forth, but understand this was ad hoc, and I would want to thus extend quite a lot of gratitude for you, Shadowy, particularly for being willing to host in the place of Wyatt and screen walking for us, which is always very much appreciated. I also very much appreciate that Drew was willing to come on here. I mean, maybe we should just name this video "An Interview with Drew" or something.
Yes, we should. To you watching this, you should understand we're just a bunch of dudes, right? Getting together, talking about topics, and we try to arrange it. And for me, I'm just very appreciative that I can, have someone I can bounce ideas off with, ask questions with. I have all these people, and usually we try to have this little focus a little bit bigger. But fortunately, we managed to get it. I would say,
as an ad hoc, not too bad. So also, of course, Piotr and Shu, as always. Piotr especially is very helpful on the sidelines with stuff as my co-sponsor. So by simply being him, just so you know, that's just the nature of Piotr. And so with that, thank all of those of you who support DPA financially on Patreon, Ko-fi, and Locals, and of course Boosty. If you find this content and anything else on the open mic or DPA generally very enjoyable, please share it. And we thank you for the subscription. May you subscribe forever. And we like you a whole lot more for pressing that like button than if you didn't. Apart from that, thank you all for watching the DPA Lounge Talks, or whatever I choose to call this. Bye-bye.
Bye.